Hello, everybody. So it's an interesting day in the market. I guess I was expecting a much larger up day yesterday night when I made my video. It seems like a lot of investors are still very panicked as to what's going to happen for regional banks when you look at how much is down, and it seems like there's a strong rotation between a lot of the financial stocks towards the stocks that have historically been safe havens, including technology, which as you know, is something I mostly agree on. Technology is a great buy. There's other types of position that investors are buying right now, which I would be more cautious about. If you look, so real estate, industrial real estate, residential real estate, I believe is going to be okay. But real estate, you have a lot of office space, you have a lot of retail space. I would be very careful about a lot of these real estate places. Utilities, if you watch this channel, I would be very careful about utilities. Those are fine in the short run, but in the long run, I believe there's going to be a lot of disruption happening to utilities. Nextera Energy is maybe just a special situation, and kind of the same for consumer defensives. You have a lot of lifestyle stock, and a lot of these old school stocks are also getting disrupted. So I'd be quite careful about that rotation. But I do love to see a lot of growth stocks that have been, leading the market for the past 20 years being back up. People are realizing which parts of the market create the value, and these growth stocks have created most of the value in the S&P 500 for the past 20 years, and the market is now realizing that, as it seems likely that the Fed's going to have to do something because of what's happening. Because we'll get to see tonight the news if people are still running out of those banks. All of these banks are issuing statements. I find that the intervention of the Fed yesterday was outstanding. The program, they just reinitiated a form of QE right away. That was an outstanding response. And despite that outstanding response, you have stocks like KeyBank, for example, was down almost 30% this morning. Another evidence of the flight to safety is, so you have both gold and Bitcoin that are up. So this is very very interesting. A lot of people call digital gold Bitcoin. They say it's digital gold. They're both up at the exact same time. If you look at the chart, it's very similar. Even down to like the little dent here and the little dent here. It's as if you have some people who are selling some of the riskier bank stocks and like just buying at the same time Bitcoin and gold, which is interesting. But this is a validation of the thesis of Bitcoin, obviously, which is be your own bank, store your money in your head, don't store it with counterparty risk at a bank, although you really have to ask yourself, there is counterparty risk today with the banks anymore because of what the Fed did. And that's why I do not understand why everything's down so much, except the fear, right? This is fear, right? Mr. Market is fearful. Even Schwab, I was looking at Schwab is down 45% in a matter of 3 days. So I don't trade. So I don't really buy these stocks. I don't trade, but I understand why people would be tempted sometimes. I believe this sell-off is out of fear. It's likely out of major fear. I don't know if people have dug deep into the funding term program that they've announced, or if they have concerns about, say, the reliability of a program, or whether they're actually going to put it in place. But I wouldn't have concerns about that. Like if you look at the FDIC, first of all, is going to make Silicon Valley Bank customers whole above the 250,000 limit, which is already a major bailout for the customers. I know the government doesn't like to call it a bailout. It's more of a saving of the customers. So let's go with that. But as far as I'm concerned, it's a bailout. You're saving that industry. Banks have an amazing deal with a new bank term funding program because, for example, well, not for example, this is what's going to happen, is they will be able to take their bonds, right? The bond losses that they have, and they're sitting on 20%, 25%, sometimes 30% losses on these mortgage-backed securities, on those bonds. They're going to be able to take those bonds and margin them at par value, i.e. at the face value that they bought those bonds at. right? At 100% at the lowest rate available out there, which is 10 basis points. So that's amazing, and they just have to pay interest on it. So this is, to give you an analogy, this is like buying a stock at 100. It's now worth $75, and you can go see the Fed with your $75 of unrealized losses, and the Fed's going to lend you 100. So this is effectively the Fed financing your losses. And of course, the Bank Term Funding Program says that it stops March 2024. But it's like yeah, right. Like who believes that? Who believes that it stops in March 2024? No, these government programs go on forever. And in fact, Maxine Waters was on CNBC saying that they're going to look at Congress and look at what they can do to make sure that banks and bank deposits are always safe. So this is going to be so interesting to see what that means for risk going forward, right? What does it mean for risk? Does it mean that these banks are going to be able to like go risk on and take greater risks knowing that they have the Fed backstopping them all the time through this form of hidden QE? I think this is very interesting. Another interesting point for us growth investors, I believe, is the 2-year Treasury. Look at the 2-year Treasury. Look at that major drop in the 2-year Treasury, right? It's in a matter of 3 days, it went from 5 to 4% on the 2-year Treasury. So this means that the market is not really expecting rate hikes anymore. The market is thinking there's no way they're raising rates next week. There's just no way. I believe it could be 25 basis points, but I do believe that 50 basis points is off the table. And so all of the fear that we've had throughout February that they were going to raise 50 basis points, those fears now I believe are largely gone. We have the CPI tomorrow, but if those banks keep selling off tomorrow, right, the CPI is not even going to be a conversation. So anyways, I really hope that the market stabilizes, and I'm not talking about this anymore tomorrow because the market has stabilized. I am now getting back into growth stocks and looking at my favorite growth stocks and seeing what growth stock is kind of a buy right now. HIMS is still down. You still have Tesla is still fairly down. You have some of the bank stocks, in this channel, I follow SoFi, Square. These types of stocks are down. So I'm going to look at that and perhaps make a video about some stocks that I believe over the long term are investments that will be hyper growth and that will be able to beat the denominator. So thank you so much for watching. This is not investment advice. This is just entertainment. I appreciate your likes and your subscribes. Thank you and have a great day.